Good afternoon, everybody. Today I'm chatting with Keith Neumeyer from First Majestic. In this interview, we discuss how silver performed in 2024 and the current supply and demand dynamics that exist for the global silver market. And we get into the start of what seems like an M&A cycle for the silver market, as well as what investors should expect out of First Majestic in 2025. All right, everybody, enjoy the interview. Keith, thanks for joining us.
Hey, Steve, it's great to see you again, approaching the end of the year.
Yeah, so I thought we could start off talking about 2024, which was pretty, I guess we could say, volatile year for silver, a good year. We went from lows of around $23 to highs of nearly $35. At the time of recording, we're sitting just shy of $29. I'm curious if we go back a year ago, look at your expectations for 2024 and how it ultimately played out. How would you say that silver performed?
Well, it performed better than I expected to see it perform. My objective coming into 2024 was to see $30 silver. Then we saw it, and that was there for quite some time, which is really nice to see. So, we took advantage of that market, of course, and it was nice to be able to sell some silver at $32, $33, $34, and our mint is also doing quite well, with the launch of the different products that we've been putting on our mint. And so it's been a great market for silver. It's unfortunate it's below 30 now. Hopefully it has a nice bounce into 2025.
Now, you gave a presentation recently at the German Gold Show, which if anybody in our audience hasn't seen it, I suggest that they check that out on YouTube. Where you talked about how silver inventories right now currently sit around 1.2 billion ounces. That's for the globe. But we think about it, about $1 billion of that is currently in ETFs. Now we go over the Silver Institute and we look at these deficits that we're running every year. Basically, I think if you took the last 4-year average, it's probably somewhere in the ballpark of 200 million ounces per year of deficit. Now, I'm curious from your viewpoint as somebody who's talking to all the different major silver CEOs and even owns a mint at this point. Do you think that at some point we're going to hit some point in the supply and demand curve where the price of silver is just going to have to gap up? Or do you think that the market's large enough that we're just going to see the slow melt up as we continue to chew through those inventories?
Well, the market is actually quite small. It's around $30 billion, which is, not a very big market. That market could fit inside the market cap of Apple how many times, or the market cap of Tesla. That's the entire silver sector I'm referring to. So, the silver sector produced about 830 million ounces this year, thereabouts. We don't know the final numbers yet. But, we'll be consuming, or, if we match last year, we're about 1.2 billion ounces of consumption, leaving a deficit of somewhere around, 400 million ounces. There is recycling that is also part of that. There's about 150 million ounces that's supplied through recycling. That number, fluctuates. So, you have an actual physical demand deficit of something like 250 million ounces. But that number that you referred to before, the 1.2 billion ounces that's sitting, in hoards, those are with the exchanges. And that 1.2 billion ounces and there's an interesting chart that I saw just a couple of months ago, which we reviewed a couple of times in our own presentations. But a lot of that silver is actually allocated to the ETFs, so SLV and SIL and so on. So even though that metal shows up on the exchange as a metal above ground, or silver potentially available for sale, it's actually really not. And so it's a small portion of that actually, because you've got about something in the order of 800 million ounces in the ETF. So there's really not a lot of silver around. There are hoards, of course, which aren't counted. Governments do have silver as well. They don't report it in many cases. So the deficits are filled. But I think there's going to be a supply shock. I think that there's going to be a situation that arises where, ABC tech company, runs into manufacturing difficulties because they can't get their metal on time. Or, interestingly enough, and I'm sure you know this, Steve, but the two big drivers of metal consumption has been the automotive sector and the solar panel sector. Both of those sectors are now consuming 40% of the mine supplied every year. And that's a pretty big number considering those two industries didn't really exist, over a decade ago. When I put First Majestic together, I was looking at computers and cell phones, and I was even looking at electric cars or solar panels. And, that's what I thought was going to be the driver, for demand going forward. But it's now turned into these other industries. And now we're seeing there's about 10,000 uses of silver from the commercial perspective, which is pretty enormous. And now with the new renaissance of nuclear energy and the governments around the world looking to build nuclear power plants, some of them, these nuclear power plants, depending on their size, consume also a lot of silver. So we're going to have another big driver of silver demand coming up over the next decade.
Okay, so in 2024, we saw some acquisitions in the silver space, whether we're talking about First Majestic and Gatos, or we're talking about Core and Silvercrest. Do you think that we're going to see more acquisitions in the silver space, or do you think that there's just not that many players for there to be big acquisitions? What do you think?
Well, it depends on, we talk about producers or developers or explorers, but, despite the fact that it's been a pretty interesting market for the producers this year, selling, gold at $2,700 an ounce and silver at, north of $30 an ounce is a pretty good place to be, historically. It's like silver's only gone through $30 three times in my lifetime. So, for it to be up at these types of levels is obviously a pretty good thing for us. But, there's two things happening. One is that for us as a major, needing producing assets, they're becoming a lot fewer. As Core grows, as we grow, other companies out there, I'm sure, are looking to grow as well. There's just not that many targets that are of interest to us that would add, substantial ounces to our production portfolio. So, we have to be careful in what we're buying as a company. We'll do over 30 million ounces of silver equivalent production in 2025 post merger acquisition of Gatos, which puts us in a pretty nice place to be. But the juniors, I think they've had a really tough go of it this year. Their share prices are down a lot. In some cases, from 50%, 70, 80%. That's very difficult for them to raise money. So they're the ones that I think you're going to really see some M&A activity happening. These single asset companies, I don't want to name names, but I have a whole group of names in my head that I could think of, but I don't want to create any, undue speculation. But, there are a lot of juniors out there that have very difficult time raising money. And if you put, two or three or four or five of these juniors together and have them have a multiple portfolio of assets, it's going to make it much easier for them to raise capital in the markets. And I think that's going to be the next step in the whole mining industry. I'm looking to see that actually in 2025. I'm pretty sure.
Now, you've been raising money in the Canadian markets for decades, and you've seen quite a few transitions from a time where there was, everybody had I guess we call them stockbrokers that would, possibly put them into junior stocks, to today where it mostly goes through direct investing through the big banks. And then people have a stockbroker. It's probably an investment advisor with one of the big banks who generally won't put them in a junior mining stock. Do you, I just know in our space where we're talking to all sorts of junior companies that are trying to raise money, the one thing that I'm starting to wonder about is, do you think that we're ever going to see another one of those sort of huge junior mining rallies where those sort of like, lesser known developers or explorers are actually have a shot? Or do you think that the market mechanics, the way that they work now in Canada, just kind of won't allow for it?
Well, the issue is ETFs. right? If you're fortunate enough to be big enough to be in an ETF, and I think the GDX J has a minimum market cap of 400 million from memory. If you drop below that, then they kick you out, but you have to be there to actually get included in. So it's a little bit of a stumbling block for a lot of the smaller companies to get in. There are other ETFs that don't have that high of a threshold, but if you're not in an ETF, it's very difficult to raise capital because your liquidity just isn't there. The ETFs bring just such an enormous amount of liquidity to the market that for a First Majestic, for example, if we needed to go raise X amount of money, which we're not doing, but I'm just saying if we needed to raise $100 million tomorrow, it's a phone call. Because our stock trades about that amount in a single day, right? So it's for us to capitalize the business or do deals out there, and also our cost of capital is also very, very low. But if you're a junior and struggling, your cost of capital is going to be probably 10 times greater than ours, and you're going to have a very select few group of investors who's going to be participating in that. And it just makes it tough all the way around. So we need to see some M&A activity. I think that these majors need to kind of get off their butt and start buying up some of these companies. There has been a couple successes in the last couple of years. I could think of two, Newfound Gold and Snowline Gold. Both of them have performed quite well through drilling. They're not at their highs that they used to be. They're still, but they're quite reasonably good looking companies. And the market needs to see some of this risk capital get rotated. So like a major comes in and takes out Snowline, at whatever price, it's a premium to market. And then that capital, would probably work out to somewhere around $1 billion market cap, at a reasonable premium to today's market. So that $1 billion is in all risk capital's hands, and that $1 billion then gets recycled back into the market, for other companies of interest, and that helps the rest of the market out because there's, the mining sector, as is so small. You throw $1 billion at, a couple of junior mining companies, and that could have a major impact on their market caps and their financeability to develop their assets. So that's kind of what we need. As you know, we took out Gatos, and then Core's taking out Silvercrest. But we need some action in the juniors to really light up this market.
Is there a theme when you guys are looking at acquisitions, like, and I'm sorry to use a sports analogy, but I'm going to do it. Like, back in the days of Moneyball, the conversation was about on base percentage. We got to get guys who walk, or in basketball today, we need guys that can shoot the three. What's the idea or the theme, or is there one when you guys are looking at doing an acquisition? Is it that we've just got to get bigger, or that we want bottom line cash flow, or we want a higher concentration of silver production within that profile? Is there any general theme that you guys are really kind of thinking about when you guys look at acquisitions?
Well, growing is obviously important. Shrinking is not exactly very fun. But one thing that management of mining companies is very well aware is that these mines don't last forever, right? So you're eventually going to run out of whatever metal you're mining, and hopefully it's decades into the future, but sometimes it's less than that. And you have to make plans, looking very far ahead. We make plans today, and we look out 5 to 10 years on how that's going to affect the business. Because we know, what the mines are, we don't know exactly, but we approximately know what mine will be producing 3 years from now, 5 years from now. It doesn't need more development dollars today for it not to get smaller. Does it need more exploration to go look for more ounces? So we're always trying to move money around in the smartest way possible in order to maintain the size of the business. M&A really adds to that. So M&A can buy you time. Like if you know that a mine is going to die in 3 years, you go and bolt on a development project that it's going to cost. It's going to take you 3 years to build it. So you go and build that mine, and it replaces the mine that is going to come offline 3 years from now. So you're always trying to plan that type of move going forward plan, and it's a constant discussion that we have on quite a regular basis.
So I got to ask you about First Mint. Jay and I had the pleasure of getting to visit the Mint, and we got a video coming out soon that walks investors through what the Mint looks like. Now, you guys gave in that same presentation I referred to earlier, you discussed how if you guys could get 10 million ounces of your production through First Mint, that would have a 2.4 billion ounce impact on the paper market. I'm pretty sure the numbers were. Do you have any sense of what impact from like a market mechanic standpoint this could have if you guys can get your ounces off the paper market and through your mint?
Well, we don't know. A lot of it's just a theory. We do know that approximately 1 billion ounces of silver trades a day in the paper markets. And, there's something, I think that number of 240 or 2.4 you suggested, I think that suggests there's 240 trading days in a year. So 240 times a billion, 240 billion ounces of paper silver gets traded annually. And the miners only produce 830 million ounces. So the banks know when this metal's coming, and they know how much paper they can write against the metal, and that leverage is enormous, and it's over 300 to 1. So that gives them a lot of power, over the price of the metal, because during the Reddit crowd squeeze back in 21, I guess it was. Silver went from $18 to $30. And I remember the guy, the head of the CFTC at the time, was on CNBC and saying, thank goodness we were able to tamper down the market because there had been serious financial harm done if the silver price had continued to move higher. So here's the regulator talking about they're successfully prevented an instrument trading on their market, their exchange, from going higher. So the regulators themselves worked with the banks to manipulate the price of the metal to make sure it wouldn't continue to move. And then over the next few days, of course, it collapsed, and it was quickly back to below $20 range within the next couple of months. And everyone who jumped into the silver space, during that whole Reddit squeeze, lost a pile of money. And who made it? It was the big banks that made it, because they just sat there and bought back all the paper from all those stupid retail investors that came in and bought it from the banks in the first place. So putting a big smile on the face of all these traders at all these banks. So, that's the market we have. What's going to change it? I think it's going to be the physical market that has to change it. I think that for us as a mining company, if we can help, by taking some of this metal away from the banks, if other mining companies want to use our mint and put their silver through our mint and get it bigger than the 10 million ounces that we could supply to it, then that would be better for the mining sector as a whole. Give that miner a better margin for their ounces that they're producing, and also take more silver out of the physical market, more silver out of the paper market. The other thing that's going to happen, if it's not that's going to break this system, it's going to be some supplier or some manufacturer, like an automotive company, a BMW, a Tesla, Apple, Samsung. We've already been approached by Samsung once, or actually twice, I think it's been now. But you saw Tesla, invest in nickel. Tesla's invested in lithium. The industrial buyers that need our metal, and not just silver, but other even copper companies and so on. They're I believe are going to have direct supply agreements right with the end purchasers, and they're going to be bypassing the COMOX because or COMEX because I don't think they want to take the risk of supply, and I think that's where the mining sector is going.
Do you guys have conversations at all about the tariffs? And or at this point, do you think that it's so unlikely to happen that it's not something that you guys really need to contingency plan for? What's your thoughts on everything that's happening there and the impact that this could have on the mining world?
Yeah, I've had this discussion with a couple of people. I've not seen anywhere where it's Trump is suggesting to put tariffs on precious metals, or even oil and gas for that matter. Um, so raw materials. The United States needs raw materials. I think that I could be totally wrong, but I'd be surprised to see raw materials have tariffs on them. I think they're more looking at manufactured goods, like automobiles, because Canada produces, a fair amount of automobiles, which all get shipped down to the United States. GM and Chrysler have big, plants in Ontario, and also we manufacture refrigerators and, things like that as well, which, those items for sure, I think they will be targeted.
So Keith, last question for you. We really appreciate that you're hopping on here during this sort of holiday stretch. If I'm an
Holiday
investor in
peace,
First,
you mean holiday peace?
if I'm an investor in First Majestic or I'm watching the story, what should I be excited about in 2025?
Well, M&A, pulling off successful M&A is always really quite exciting for me. I put this company together 21 years ago, and we've bought every mine we own today. We discovered a lot of metal, but we bought them as producing assets or assets that were producing at some time historically, and it needed more capital, more investment to get them back turned on again. And that's what we've successfully done over that period of time. And when we did our acquisition of Santa Elena in 2015, or the company increased in size by 25-30%. When we did our acquisition of Dimas in 2018, the same type of thing. The company, was increased by about 30%. This Gatos transaction is almost identical. It's going to have a transformative impact on the company. I can't say too much about it because we're not closed yet, and the SEC doesn't like us talking about things that aren't final. So I'll kind of stop there. But I would suggest for your listeners or for our shareholders who are listening or potential investors, watch for the first couple of quarters. Watch for Q1, the production numbers in Q1, and then wait for Q2 if you wish, and just watch how the financial part of the business improves, the production quantities that they start to grow, and it's going to be a pretty exciting year. I think the end of 2025 we're going to look like a different company.
Well, Keith, thanks very much for hopping on here. I wish you a happy new year, and our audience always is very enthusiastic whenever you come on, and we certainly see it in our numbers when we talk about silver. And nothing seems to get as much traction for us as silver. So we really appreciate you hopping on here, and let's do this again shortly. Fingers crossed after the acquisition goes through.
Yeah, I think we schedule something for February that might work out for us, and we'll be able to talk about some more exciting things that are going on, and also we'll have some exploration news out by then on both Santa Elena and San Dimas, which you might want to touch on as well, because drilling at both those mines have been pretty active throughout 2024.
Thanks, Keith.
Great. Okay, thanks, Steve. Good talking.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, guys, let us know what you think in the comment section. Thanks, everyone.